So today we will do the chapter 3 partnership, retirement and death. Retirement and death both are the same thing, only some changes. In case of death, some changes are there that I will tell you while doing the question, so that you can understand the rules and regulations more easily. Otherwise it will be more theoretical. With the practical questions, if I will explain it, you can remember it for a long time. So we will start with now question number 7. Pankaj, Naresh and Saurabh are partners sharing profits in the ratio 3 to Naresh and Pankaj. Who are the partners? Pankaj, Naresh and Saurabh, and their ratio was 3 to 1. 3 is to 2 is to 1. Or 1. And who is retiring? Naresh retired. This person retired. So if nothing is given about the new ratio, or his share is taken by P and S in which ratio or any condition, then what we do with the person who is retiring, we put a cut, and remaining partner's share will be, this will be old ratio, and P is to S, new ratio will be 3 is to 1. It will be the new ratio. Okay, this will go out 3 and 1, and they are all new ratio. Sacrifice new ratio, gain ratio will be the same gain ratio, or it will be the same ratio if no condition is given. In this question, no question is given. He retires on 30th September. He retires on 30th September 2017. It means mid of the year. So, and balance sheet is given. The Pankaj and Naresh Saurabh balance sheet as on 30th December, a balance sheet is given. In the balance sheet is given, and you are asked to prepare ledger accounts and balance sheet of the firm after Naresh retirement. So it means you have to calculate Naresh payment due to Naresh. Otherwise, after Naresh, you cannot make a balance sheet. So first, for Naresh retirement, we will make a realization account and capital account, and thereafter we will go to the question. So, revaluation account first we will prepare. Though it is not asked, but it is necessary, otherwise you cannot prepare the position after his retirement. So premises appreciated by 20%. It is account and debit and credit sides are there. So if any asset is to be increased, assets are debit and we have to increase it. So for increasing, we have to make more debit. It means that asset we have to write with by word. By means debit. So we will write the word by before that. And 2 it will reduce it. 2 it denotes credit, by denotes debit. So if we write the account with the name of, with the by prefix, it will increase. So by premises we will write. By premises. By premises 20% we have to increase. Premises is given 80,000. It will 20,000 means 16,000. It is increased. Stock depreciated by 10%. So stock is to be reduced by 10%. Stock is given 9,000. So 10% means 900 we will write. And 2 means stock account is being credited. Stock account is credited, stock will reduce. Then, and provision for bad and doubtful to be made on 5% of debtor. Debtors is 6,000. You have to make a provision. So provisions are in balance sheet always credit items, liability side items. So credit items when you have to increase, so you have to make more credit. So you will write 2. 2 means credit that account. Provision for bad and doubtful debts. So 6,000 is given. 5% of it is no, it will not come here because 5% is 300. Already 400 you have. Already you have 400. It means you have to reduce 100. So you cannot write it in this side. It will increase the liability. we are not going to increase the liability side provision, we are going to reduce the liabilities. So provisions, by provisions we will write here, by provision for bad and doubtful debts, it will reduce the provision, because this is old and this is this is new 5% and this is old reserve. So already they have 400, but they want to keep it at a 5%. It means their provision is on a higher side. We will reduce it. So credit item, if you want to reduce, you write by debit. So by means debit that account and it will reduce that particular account. Further provision for legal damages to be made 1200. So provision for legal damages. Provision for legal damages, new they want to be made for further provision, means they want you to make further arrangement. If already in the balance sheet 6,000 is given, they want further. This further word you keep in mind. Further provision for means extra provision for legal damages to be made for 1200. It means provision you have to create by extra provision for legal damages. They want to make further provision. So further provisions you have made, you have created that account, and one provision will be increased. Furniture is to be brought up. Brought up means also to increase the value. Brought up to 45,000. You remember, brought up to 45. 41,000 already given. You have to increase it. So by increasing by furniture. But we will not write here 45,000, but up to means two word is very, to and by, these are two words. Be careful for that. By means simply you are writing like your premises have appreciated by 16,000, you have written 16,000, but when up to two word is there, be careful. And here you have to make the balance sheet figure as 45. 41 is already there, so only 4,000 rupees provision you will be making. Okay. Goodwill to be valued at 45. Firm's goodwill. Goodwill is valued at 42,000. So this retiring partner, Ncert, Naresh share, his share will be 42,000 into 2 by 3 to 1. Means 6. Total is 6. Their total is 4. So by 6. 6, 7 ja, and 7 to the 14,000. It is his Ncert share. So it will be given by P and S in the ratio of their gain. Gain ratio will also be 3:1. So P will give how much? 14,000 into 3 by 4. And S will give 14,000 into 1 by 4. 4 12 20 4 पंजे 20 25. And here it will be also 70 10,500 and 3,500 will be given by. So goodwill calculation we have done, but it goes to the capital account directly. It does not go to revaluation account. Then 26,000 from Naresh capital account be transferred to his loan account. Whenever any partner is retired, by default his all balance is transferred to his loan account if no instructions are given. If instructions are given, we go as per the instructions. So here some instructions are given, we will follow that. And Naresh share of profit till the date of retirement is to be calculated on the basis of last year's profit. So his share, Naresh share of goodwill, it is. Similarly, firm's profit, firm's last year, whatever the condition they have given, you have to follow. Firm's last year profit is 60,000. So on 30th September, he is retiring on 4/9 September, means on after 6 months. So 6 month profit, 6 months profit will be 30,000. Out of this, N's share will be 30,000 into his share will be always in old share 2 by 6. 2 by 6. So he will get only 6 5s are 30, 5s are and 5 to the 10,000. 10,000 we will Ncert and we will debit PL suspense account. PL suspense account, and this suspense account is written off by debit to P&S in the ratio of their gain ratio in 3:1. Okay. So here it will be debited. Here one thing I want to tell you, extra thing. Why suppose this condition is not given. This condition is not given. So as per as per partnership act, what we do, we transfer all his balance to his loan account if nothing is given. And how then this profit part will be given to him? So here they have given under section 37. Sometimes they ask. So this is under section 37. Section 37 we are explaining. Section 37 tells two parts. One is if firm is unable to pay, so he is either 6% on his loan account, on his balance. This is his right, or the profit earned by his capital, by his unpaid capital balance, unpaid capital balance. This is his right. In future, what he will get either 6% of his balance or profit earned by his unpaid capital balance, whichever he likes. Here it is because this provision may suppose firm goes in loss. So in that case also 6% on his balance he is entitled. So it is his right to choose either this one or this one. It is not firm's right that I will pay at the rate of this. It is not their right. It is the right of the partner, retiring partner, or the partner who has expired. So this under section 37, two provisions are there. Okay, so now here we will make a total because no further transactions are there. So 20,100 is here, and here we will write 20,100, and here we will write 20,100. This space will be saved. Okay. Then this profit is to profit transfer to capital accounts in old PSR, in old ratio. So now this is so P Naresh, P and S. So P will get 3 by 6. So 3 by 6. He will get 2 by 6 and he will get 1 by 6 of 18,000. So P's portion will be 9,000. His portion will be 6 3s and 3 2s are 6. 6,000 and 1 6 means 3,000. This is into 18,000. Like this is calculated. So this will be. Now capital accounts. Okay. This capital accounts of all the partners we are going to make. This is again debit and this is again credit. So here all entries are by, here all entries are to. So here by balance, brought down balance of the balance sheet, and then by PLA account. By PLA account. Their accounts are created. Okay. Then 46,000. Then 30,000. And this is P and S. P and S. P and Naresh and Saurabh. Pankaj, Naresh and Saurabh. 30,000 and 20,000. Saurabh 20,000. Then PLA profit 9,000, 6,000 and 3,000. Try to always put a comma so that your total will be always correct. Then by default, if nothing is given, we divide the general reserve that is given in the old balance sheet. General reserve or accumulated profit and loss is given, that is also distributed. So here by general reserve. General reserve is 12,000. So 12,000 again it will be divided in old ratio 3 to 6. So by 6, 12,000 we will divide, it comes to 2,000. It means 2,000 he will get 4,000, 2 by 6, and 3 by 6 means 6,000 half he will get. So half he will get 261 and 16 by this general reserve. Suppose PL account, accumulated profit and loss account is given, so this way here we can divide that also. And if PL account is given in the asset side, then we write to this side and recover. This is for recovery and recover from them. Okay. So this other entries are okay. So now we will go for this goodwill. So by goodwill how it will come? By Naresh, by P and S, by P and by P's account, P by P's capital and by S capital, Paresh and Saurabh. So they will give 10,500 and 3,500. They will give this, and here we will recover it to N's capital. N's capital account, P will give 10,500 and S will give 3,500. This is goodwill distribution. Okay, now last year's profit we have to give, and his profit part is 10,000. So by PL suspense, by PL suspense account, 10,000 will come to his side. So his all we have calculated, and this comes to 5 का 10 का 0 आगे 3 4 6 6 3 9 9 2 और 3 1 4 49,000. Here, while dividing the goodwill, what I said, if nothing is given, then by default gain ratio happens to be it. But here in this question, they have given the new ratio. New ratio they have given. So when new ratio is given, gain ratio becomes a separate one. So in the question's last line, they have given their new ratio. New ratio they have given at 5:1, means 6. It means 1 by 6 and 5 by 6. Already he was getting 1 by 6 and here also 1 by 6. Their new ratio they have given 5:1. 5:1 means the S is gaining nothing. S is gaining nothing. All gains are to P, Pankaj. all gains are to Pankaj. Saurabh is not gaining because Saurabh was gaining 1/6 previously and 1/6 this time also. So S will not give anything because his share, he is not gaining anything. He will have to pay 14,500 will be paid by Pankaj. So all this portion, all the portion will be only his share 14,000. So goodwill share and share of goodwill 14,000, and it will be given by full will be given by Pankaj. So this figure will change to 14,000. Okay, this will be 14,000. Okay, here nothing will come. Okay, so it will not come here. Okay, so his capital will be 25,000. Okay, and here clear suspense is okay. All part will be given by, all 14,000 will be given by P. His full is 14,000 will be given by P. Okay, 6 4 10 4 14 4 3 4 5 64,000. So 64,000 will go to the loan account, and rest the balance will come here. 61,000. 61,000 his balance will be. So his balance will be for 47,020. So this is okay and this is okay. This is in the book, this answer is wrong, 54,000, because profit share, here profit share is given, and okay, this is causing the book's answer wrong. Okay, book's answer need to be changed. Okay, so now we will go, because in the last profit is given 60,000. So rest is okay. So now they ask you to prepare a balance sheet. So we will prepare a balance sheet, and serially we will prepare so that nothing changes are there. So I will rub here and make the balance sheet, and then I will explain. Okay, it will save your time. So now balance sheet. So general reserve already we have distributed. Sundry creditors we have not distributed. 15,000 will come here. Okay, then bills payable. Bills payable is 12,000. Okay, bills payable. Then outstanding salary is 2,200, and then provision for legal damages, it is given 6,000, and you have made further provision of legal damages 1,200. So it will become 7,200. Okay, then capitals, then loan account of this person, and loan account, loan account is 64,000. Capital accounts, Pankaj and Saurabh. Pankaj balance is 47,000 and Saurabh balance is 25,000. So 72,000, and the total is here. In his case, Pankaj's case, one condition is given. He is to be given 26,000 to Naresh loan account and balance to be paid. It means to loan account only 26,000 should go. 26,000 and 10,000 difference is there. So it will be 26,000. 26,000 from Naresh capital account to be transferred to his loan account. So 26,000 will be rest to be given to bank account. To bank account we have to give 38,000 we have to pay him cash, and for this purpose if required you have to take a bank loan. So how bank loan we can calculate? Bank loan we can calculate bank account. So bank account balance is there in the balance sheet. Bank account is 7,600 and we have to pay to N 38,000. So 2 and 38,000. Naturally, some more thing is required. So this is balance and this is by loan. So loan we will take from bank. 0 हाथ में आया 1 7 और 1 8 38,000 we require 38,000. And okay, N's loan account to N's to bank. So bank to balance 7,600 is their balance, and we have to give to N and 38,000 by N. By N 38,000 we have to give 38,000. So the total should come 38,000. It means to bank loan. Bank loan will be 10 का 0 हाथ में 7 8. So 30,400. 30,400. Here we have to write N's loan account will be 26,000 as per the question. 26,000 only should remain here. So his loan account will be 26,000 and bank loan will come. Bank loan will be your 30,400. 30,400. So for okay, this is your total. This total will not match with the book's answer by 10,000 because in this question PL profit is to be given to him. So his 10,000 is coming here in his bank loan account. Okay. So now this side we will go. Bank account is now written off. Because bank nothing balance is there, only loan is there, and loan we have written here 30,400. Then debtors. Debtors is given 6,000 minus 3,000 provision we have made, so 5,700 it will come. Stock, here to and by is not written because it is not account, it is a statement. So this side is your liability side, this is your asset side. Okay, stock is 9,000 and stock you have reduced by 900, so 8,100 because 2 means minus. Then furniture you have made it to 45,000 as per the question. So 41,000 is given and 4,000 you have increased by means debit. 4,000 you have increased, so it has become 45,000. Then next is furniture. Then next is premises, and you have 80,000 and you have increased by 80,000 plus 16,000, so 96,000. So this side total is 800, हाथ में 13, 5, 18, 24 कहते 4, 6, 1 minute, and PL suspense account. And PL suspense account, it will come here. That later on it can be written off by debit to these partners P and S. So here S will not give anything, P will only give. So P from P's account we can take it. So both side is you're agreeing. With the book answer it is not agreeing because 10,000 is given as if I have taken this question as there is some problem in the answer. Answer means here extra profit sharing is given on the basis of loss. That's why section 37 also I have explained to you. Now this portion is over. We will go to next video in next part. Okay, thank you for watching our channel. Please subscribe and share to your friends. Thank you.